Most people think investing is only about stocks.
But some of the most stable income in the market actually comes from bonds. When people hear the word bond, they often assume it's complicated or only for large institutions. In reality, a bond is one of the simplest financial instruments to understand. At its core, a bond is a loan. When you buy a bond, you're lending money to a company, a government, or another institution. In exchange, they agree to two things. 1. To pay you interest, usually on a fixed schedule. 2. To return your original investment, known as the principal, at a specific future date called maturity. That agreement is contractual. Unlike stocks, bonds don't represent ownership in a business. They represent an obligation, a promise to pay. That distinction is important. With stocks, your return depends largely on market sentiment, earnings growth, and investor behavior. With bonds, your return is defined upfront by the terms of the agreement. This is why bonds are commonly used for income, capital preservation, and portfolio stability. Many bonds make regular payments, monthly, quarterly, or semi-annually, which can provide predictable cash flow. For retirees, income-focused investors, or anyone looking to reduce reliance on market timing, this structure can be valuable. Another key concept with bonds is maturity. Every bond has a timeline. At maturity, assuming the issuer meets its obligations, the investor receives their principal back. This creates a clear framework around expectations, something stocks don't offer. In uncertain or volatile markets, bonds can help balance a portfolio by providing income and reducing overall swings. They're not designed to be exciting. They're designed to be dependable. Historically, many disciplined investors use bonds not to beat the market, but to support a long-term strategy. They allow investors to plan, budget, and stay invested without reacting emotionally to daily headlines. This is especially important because investing success often depends less on chasing returns and more on consistency and structure. Bonds aren't about hype or speculation. They're about structure, discipline, and income. And for many investors, they play a quiet but essential role in building long-term financial stability. Visit elcastilloinvestments.com to learn more and follow us for more financial insights.